Hi, guys. Welcome to the special episode of panel discussion at the Coffee Conversation show, powered by the Emerging India Forum TIF and our technology partner, Prime Infotech Solution. This time, we are celebrating the fifth anniversary of Coffee Conversation show. I am Jolly Singh, co-host at Coffee Conversation, and I have with me our host for the evening, Lion Amir Virani. Today's theme is building trust in business, corporate governance in a changing world. Corporate governance is the foundation of trust, accountability, and long term success in any organization. In an era of rapid globalization, evolving regulations, and increasing scrutiny on ethical business practices, companies must navigate complex governance challenges while fostering innovation and growth. At the Coffee Conversation show, this panel discussion will explore the evolving landscape of corporate governance, its principles, challenges, and the role of leadership in ensuring transparency, compliance, and ethical decision making. Our esteemed panelists will dive into pressing topics from broad dynamics and regulatory adherence to the integration of technology in governance and the rising importance of ESG factors. So let's get started with this insightful discussion as we uncover the future of corporate governance and the strategies that will define success in the years ahead. So before starting, let me just introduce to our amazing panelist for the evening today. So our first panelist is Vignesh Hariharan, a seasoned professional serving as the Chief of Staff and Legal Counsel at Novistra Capital. With a diverse and impactful career, Vignesh has seamlessly navigated the intricate intersections of legal and corporate realms. As a legal expert with significant experience in mergers and acquisitions, corporate law, and life insurance, Vignesh brings a wealth of knowledge to the table. Our second panelist for the evening is Jaswinder Singh Shekhawat, Head of Legal and Compliance at MediBuddy. Having worked with leading insurance giants like Manipal Cigna, Bajaj Allianz, and Royal Sundaram, he brings unmatched insights into risk mitigation, regulatory challenges, and the future of legal tech. Our third panelist for the evening is Khubi Agrawal, an in-house counsel with FMCG sector working with Marico Limited, where she navigates the fast-paced intersections of law, business, and consumer trust. She is currently working extensively on regulatory compliance and brand governance, amongst other things. As a passionate advocate for ethical growth, she believes governance is not just about rules, but about self governing ways of working. A very warm welcome to our esteemed panelists for the evening.
Thank you.
Thank you.
So, uh,
Thank you.
we are very delighted having you all guys on the show, and let's get started into the question. And I would like to invite our host for the evening, Lion Amir Virani sir, to take the questions ahead with our panelists today.
Yeah. Thank you, Jolly, for wonderful introduction. So before we begin, just wanted to give the ground rules. We'll keep open, so anyone can start the sharing the inputs to the questions, and second panelist can add third, and later on we can in the end we'll do the summing up. So this way it will be like the coffee conversations free flowing. So my first question: how do you define corporate governance, and why is it critical for the long term sustainability of corporate companies? So who's starting?
Maybe I'll take this. I think um, when you're looking at corporate governance, it isn't specifically defined for um, industry by industry. It's largely definite within a specific set of frameworks or rules or processes or practices or policies that are placed for you as a company to manage your company, your stakeholders, which could be shareholders, employees, regulators, customers, any of these individuals, right? It could be any of these individuals. And the primary let's say, ethos behind corporate governance is to manage a company in a way that is ethical, that has transparency, and has accountability through this framework. But yeah, that's just a brief way of looking at it. Maybe uh, the other panelists can add a bit more in addition to what I've said.
Thank you, Vignesh. So
Very
who's
interesting
coming?
point, Vignesh, and maybe just to add on to it, and because I think I feel compelled to give examples from the law, the statutes that we read on a daily basis. To me, when I look at corporate governance as a concept, and as a, of course, as a student of law, constitution to a country is corporate governance as a concept to a company. If a constitution guides basically a certain ways of practices, a core of how the beliefs, the systems, working principles that a country would follow in cases of uncertainty, or that they would go back to when there is a certain situation of gray and they would have to figure out the hows and whys of it. And similar to that is what corporate governance, albeit not a documented thing, as Vignesh rightly said, but of course, it finds its genesis in Companies Act 2013 by the way of Articles of Association, Memorandum. In case it's a public listed company, it would find its way, if it's a top 1,000 listed one, in LODR regulations, etc. So, overall, just to maybe sum it up, that as the other panelists have also echoed, that corporate governance as a concept is more like guiding principles that a company organically solidifies or keeps evolving at with the changing times, that tells it how it would govern its ways of working and practices, which of course also reflects in the laws, in compliances, in their policies and their frameworks across all functions, is what I mean, what I'm trying to get at. So yes, I think I'm just trying to echo what Vignesh has said, maybe with more examples from the statutes.
Yeah,
Yeah,
beautiful,
yeah,
beautiful.
right. So completely agree what Vignesh and Khubi are saying. So basically, what Vignesh is saying, it has to be implemented initially the policy framework, and Khubi has highlighted on the legal aspects of it. So while I'll take that part to a implementation part, because the policies are framed at a higher level, but the governance implement at the downstream level. So when the policies are being framed, it is very much important that those policies are also being implemented downstream. Otherwise, if that's not implemented, then there are mishaps happening within the organization, and the lose of control which goes away, and which can have a severe impact on the organization as a whole.
Beautiful.
Right.
So, lot of insights in the first questions. That's good. My next question: what are some of the key principles of effective corporate governance that every organization should adhere to?
So should I?
Yeah, yeah,
Yeah,
please.
yeah,
Okay, okay. So I think it starts from basically, I will divide it into various aspects of it. Basically, it starts at the initial level of at the board level, where the policies are being framed for the governance policies, where the board needs to have an independence, and the directors also want to implement the policies, how the policy framework will be governed. Then comes about the transparency and the legal processes, how those processes are being framed within the organization. Then comes about the tracking of all the things, that how the whether the policies which are being framed and the legal aspects which we are trying to cover in that, whether all those reforms are being implemented or not, which ultimately gives a confidence at the higher level and the stakeholders at the second level within the organization, that ultimately makes this whole as an ecosystem, where your shareholders or the board is well assured that how the company policies are being implemented. So for me, it is basically an ecosystem which works within the organization for implementation of a governance policy.
Beautiful. So, who's coming next? Taking forward the conversation.
Ladies first. I probably go once.
Thanks, Vignesh. All right, so maybe I'm just going to build up a little from Jaswinder's
Yeah,
point of basically
sure, sure.
processes and systems, right? So once again, um, when we talk about principles, I'm assuming there could be plurality of it, but if I were to point out one, and which I have as my learning, is with the changing landscape in the regulatory prism, proactivity is, I think, for me the most interesting a principle, that a differentiator that's coming out as a differentiator for companies that are topping the helm of corporate governance in the industry. When I'm saying this, of course, my data, my learnings are limited to that extent to an FMCG. When I say proactivity, it means laws keep changing with time and innovations only outpace us. So the pace at which we are trying to bring new products in the market is always going to outrun the pace at which the regulations are going to be aligning with them, right? For example, nutraceuticals as a concept is evolving in the regulatory space, while it's creating a rage in the market if we are just browsing randomly on Instagram these days, etc. So what I'm trying to converge at is, with my learning, I see when a company is proactive at assessing, apprehending, anticipating, and picking up what can come to it instead of having to wait for the laws to kind of come and catch hold of it. It's just a way of you driving a narrative to the board, to the public, to the regulators, that you are somebody who can drive compliances. You're somebody who can drive processes without having to be dumped on you, without having to be enforced on you. So today, when I look at the companies as case studies versus what we can do better, is I feel proactivities for me then would be the defining differentiator for companies to effectivize their corporate governance as a practice. So yeah, I mean, and definitely my panelists have very elucidatedly mentioned what principles are traditionally, of course, always expected, and that we ought to continue as we go forward. Maybe proactivity is just one of the things I'll pick up as a theme or highlight, is what I feel. So Vignesh, I think I took your time.
No
You can.
worries. Um, so I think from a slightly more um, international perspective, the idea behind corporate governance has now become principally aligned with how progressive you as a company are towards your stakeholders, right? So I think it's probably the next step from proactivity. It is about how progressive you are in acknowledging the stakeholders that exist within your company. So it could be employees, it could be regulators, right? After a point, the companies that largely set the standards are the ones that are most compliant with regulators because they're the ones setting the standards for these regulators. One, two, for their employees, they're the ones who set standards in terms of what industry policies could look like, or set up industry policies by themselves. A good example would be Zomato sort of spearheading a menstrual leave policy within India, right? So it could be that's the thing. The spectrum gains all the way from being able to influence regulators all the way up top to going down all the way to understand your grassroots level problems. And I think that sort of links both what Jaswinder said in the first answer and what Khubi sort of talks about with regard to proactivity. The idea is companies that now can lead are the only ones that will be more progressive with policies. And the more they're progressive with policies, the more likely they are to not just set standards, but also allow other companies to adopt new policies. So it could be things like Airbnb's policy of working out of anywhere in the world for about, I think it's a 90-day policy, if I'm not wrong. Right. So these are policies that are employee friendly. These are policies that are important as well. Right. And that leads me to the second point, which is inclusivity. Right. Because you are proactive and you're progressive, you are also inclusive, and being inclusive within the corporate governance structure, trying to accommodate for all stakeholders within your governance metric is what is going to make your company stand out, is what's going to make your company actually survive and thrive. Um, a company that possibly is still archaic, not adopting new tech, not adopting new employee favorable policies, not understanding what a regulator currently needs. It could be simple things like the gaming industry trying to differentiate between skill-based gaming and gambling, right? Simple distinction. But a corporate governance policy that sets that standard can influence policy currently in different landscapes. So that's where I come from, to be honest, in terms of governance.
That's beautiful. Now, uh, let's come to the challenges. In your view, what are the biggest challenges corporate boards face in maintaining governance standards today? So, who wants to start?
um I mean, I can pick up.
Yes.
Building up on the previous point I'd made, that once again, the pace at which a regulation is made or a regulator anticipates what's new in the market for which we might need to regulate, for example cryptocurrency for that matter, or AI tech and intellectual property, digital laws for that matter. What happens is innovation, as Vignesh has also rightly echoed in his last point, that as the companies drive the narrative globally as well, when it comes to, let's say, policies, when it comes to, let's say, enablements for its stakeholders or customers, innovation is going to be at the heart of any product or service industry for that matter. And the fact that when we talk about innovation, we keep in mind that it comes with an agility, it comes with a pace at which even regulators are expected to kind of keep pace with the industry at the same time. And as I learn at my daily job, that this kind of misalignment can at times lead to a certain area of gray, where where we are trying to figure out how to enable compliance for an area where there are no laws certain yet. So it's as simple as, what compliance do I need to ensure when I have to advise my business on a particular product for which there aren't defined or documented processes or guidelines as such, which could be a challenge given, as we talk there, we are every company is just trying to create create differentiation in the market. Every industry is coming out with a new product that we've not heard of, or a new technology that is just completely dis um, it's unearthing different kind of prisms of expectations as such, right? So yeah, that was the first. And maybe just to build up on it, I think a challenge that I personally, in my role or in my capacity as an in-house counsel in FMCG, I can definitely talk about are third party risks when it comes to compliances itself in corporate governance. So traditionally, how we understood corporate governance when it evolved is the fact that a company maybe needs to ensure a certain documentations processes inter se for itself to be governed, and through its employees or through its processes or systems, right? And the moment you extend that into another human or into another arm to ensure, let's say, it's influencer marketing, very simple example from an FMCG POV, the guidelines pertaining to what kind of advertisement I need to roll out is very particular in terms of what industry I'm practicing in. And while I have all systems and processes in place, I have a battery of lawyers advising a company as to what advertisement content should go out, etc. The moment an influencer makes a statement with my sponsored content which is not in keeping with the law, I'm as much in the hammer of the government or the regulator as the influencer is, no matter how many contractual safeguards I put for myself, or what indemnities I keep in my favor. So that definitely is one risk, that maybe I'm talking more from an legal operational POV, but definitely a risk, because corporate governance is in an act. One advert we've seen historically, we've been seeing even more rampantly as we talk, that more companies with even one advertisements can really see light of the night and not the day, right? And and it really does take that much time to come back in the fore and kind of try to reinstate a position. So I think, yeah, third party compliances or risks when it comes to corporate governance is something I feel can be a potential. I wouldn't call it a challenge, more like a hiccup of sorts, because of course as lawyers we always know our way out. So yeah, so I'm going to give it over to my other panelists.
Uh,
Right. So
Jaswinder, do you want to go ahead?
yeah. Okay. So basically, what has been my observation during my course of journey is that while putting a corporate governance, the basic challenge which comes is about the mindset. The first question which we generally face is whether it is a mandatory thing. So that's important, that that mindset has to change whether it is mandatory or not. So taking example of DPDP, because it's the one thing which has been going on since a while. So most of the time I face these questions from the stakeholders, that the act is not yet enforced, why do we implement the measures to take the consent mechanism and all. So I think that's the basic challenge, and that mindset has to change from whether it is a mandatory thing or it is a compliance requirement. It is a good practice which is required for day-to-day functioning and a hygiene practice for the organization as a whole. Second thing comes about is the management between the stakeholders and the shareholders. The expectations at both the levels are completely different. So stakeholders would want that my workflow should be very smooth, while shareholders' a point of view would be everything should be watertight. It should be in a particular mechanism. So at that point of time, the governance function comes into place where they have to play a very important role of balancing between the stakeholders and the shareholders. So to ensure that the processes are still intact while it is also an enabling thing for the business and other functions.
Excellent. Thanks, Jacinda. So I'd probably just like link what Jaswinder and Khubi said. I had a few points in addition. But as a precursor to what Jaswinder said, right? We tend to think of corporate governance as this mythological figure that exists because we are as a company mandated to, or it we have to comply with it, or without really understanding that corporate governance is a business friendly activity. It's a very important piece to push for making your business sustainable, right? It's not about the fact that your business could get sued, you could have multiple risks. All of those things are, I'd say, resultants of breaching a corporate governance policy. But the primary incentive behind a corporate governance policy, in and of itself, is to try and ensure that you create an environment and, like Jaswinder said, a mindset to understand why your company exists. The reason behind your company's existence can be put down as a corporate governance policy. And there are endless examples to this, right? So, for example, Intel's policy is Intel Inside. The idea behind Intel's policy, it stems down from that tagline, right? It stems down that we are going to be at the forefront of tech, and we are going to utilize that as the precursor for all of our policies. So if they have to look at developing foundries, if they have to look at identifying markets across the world, all of that is dependent on the primary ethos which runs their governance. So this myth that corporate governance is not something that's required is something that not just affects big companies, it affects startups, right? Startups don't think about corporate governance at all because they're there to escalate their business, they're there to bring their product to market or service to market, any of those particulars, right? But what they don't realize is that without a robust framework that helps them in determining how they can manage their own set of employees, their stakeholder, any of those individuals that are manageable, that require management, you are not going to be in a position to run your business. So a simple example, right? Most startups, at least if I'm not wrong, percentages suggest about 70 to 75% of startups fail primarily because, and it's not the fact that they lose funding or they sort of go into hyper expansion. It's the fact that there is no governance that determines what your business policies are, what your business strategy is going to be. So without a guardrail to how you're going to expand as a founder for a startup, any company, you are not going to be in a position to do well. So my two principles and two big problems that currently exist or challenges that exist in corporate governance is the myth around it, and two, the fact that they that companies believe that it's not something as important and isn't as business friendly as it is supposed to.
Maybe just one parting kind of a line with Vignesh's narrative. I completely agree, and because I mean I've also had my own learnings in terms of partnering with startups, etc. I can tell you one thing. I think the differentiator here is whether you think of corporate governance as a culture or compliance, right? So, as Vignesh has aptly put, so if I from top down, right, or bottom up, if this is something which is a way of working, it's not going to be looked at as a compliance or an expectation as such. It becomes something that you do from the get go, right? So, first time right approach is something, if it's there with a corporate governance kind of a policy, as Vignesh has rightly said, it really creates that differentiation in the long term. Maybe your top line is going to be impacted by the sluggishness in the approvals or things like that, which business feel on the operational front is the immediate kind of effects that they feel. However, in the long term, it that brand that they create in the market, that trust that they garner from the consumer, is what pays off and is what tells that corporate governance here is what created that differentiation in a startup that reaches through its position into a well reputed company and things like that. So very well said, Vignesh. I completely agree with you.
Let's go. Now comes the technology. How can technology be leveraged to improve corporate governance processes, such as decision making and compliance?
I think we'll let Jaswinder go first this time.
Okay.
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 Sure. So yeah, I think technology in first place is in itself requires certain level of corporate governance and compliances as the way or the speed at which the technology is changing. It is very important first of all to govern the technology, how it is being used in the organization. Then comes the question of how AI can or the technology can leverage in compliance activities. So definitely, if we go back to a certain era of around 15 or 20 years back, everything has to be tracked in on a manual basis. So I'll start with the basic technology like the computers which came into the world. So how did that evolve the whole process of governance functions within the organizations? So I think with the evolution of technology, the governance function has also evolved parallelly with the technology. Now, with all these functions coming into place, the compliance function or the governance functions have been given importance because of the technological advancement in the organizations. Otherwise, previously, when I've seen this function had not very much importance and it was outsourced to certain agencies who were taking care of the compliance functions. So I think because the management is when the management is looking at the things, they want to have a clear idea and a picturization of what is being implemented and done in the organization. So technology has given the function that kind of a leverage where you can showcase the management or the board how the processes have been implemented and how that is being tracked. Secondly, it has technology has helped in managing the risk and the governance of all the risk mitigation practices which have been implemented in the organization, mostly in terms of banks or financial institutions, if I say. So technology has played a very pivotal role in those kind of organizations, especially in the regulated entities where SEBI has also tracked down certain cases of fraud and mismanagement of funds. So from that perspective, I think from risk perspective, it has played a very important role for me, and I think other panelists can also touch upon other points also.
Khubi, maybe I'll let you go last because we sort of try and follow a cycle of this.
Sure.
Um, so
Okay.
for me, I think more than the fact that it's about corporate governance, I think technology enables corporates in governing each part of their function. So a sales function can be governed by its own CRM. A legal function can be governed by a CLM that currently exists. There's so much tech right now that you can govern every single function of your company primarily through tech. Not that their human intervention isn't required. Obviously, they're enablers, they're not replacements, right? After a point. But a good example, and I think Jaswinder went more macro. I'll try go a little more micro in this case. So if you're looking at corporate governance from a very legal team standpoint, right? You're looking at being in a position where you're looking at audit trails for the kind of revisions that your contract goes through. You're looking at what is the approval matrix for a contract? Who is signing off on these contracts? Are business heads actually aware of the risks within those contracts? Will they be able to pull it out at request, or do they have to go back to the legal team? All of those things can be resolved by utilizing a CLM for your purpose. I mean, No, I'm not going to name names because no one should think I'm endorsing stuff. So the idea is you have simple tools that can take care of basic functions of your team and thereby relieve your function. So, for example, if you're taking a CRM, you're relieving your legal team from the entire contract management process, which means your legal team now is empowered to take care of strategic advisory services. So they can spend their time actually reading up on the kind of regulations that they're pertinent to. Look at industry standards, develop industry standards, if nothing else, right? You as a with the availability of technology, you are enabling teams from their menial admin tasks, and thereby those tasks that are menial and admin oriented get governed by themselves, which means all you require to do is just go back, look at the audit trail, you understand what information is. Your next step, as every team in your business now will have, is to just go and see how do you enable better business, more ethical business, more, let's say, wonderful like practices within your business. So that's where technology is leading us to, not just not just as a replacement of menial tasks. Please.
Question.
Summing up in a
Khubi.
sentence. Yeah, just I think they've both covered it quite summarily, but I think just one point, one addition here would be that I understand the question is to improve the corporate governance by technology leveraging it, right? So, with all the processes that, as a part of a function that we are instituting, let's say contract management, compliance management, etc., an additional tangent to make it maybe more leveraging would be an onset of risk assessing abilities of the technology, right? Using the risk assessment technology abilities of AI to maybe detect early signs of once again, I'm using example from my day-to-day learnings, is I we have a lot of advertisement content in the market, and AI can always keep scanning the advertisement contents to flag it to me, to highlight to me that of the 10 contents you have, two are potentially more susceptible to a regulatory scrutiny than the other 8. And maybe this is going to be something that will maybe make a headway for a more proactive kind of action, which will marry legal, business, marketing together and tell that okay, this is what we can do, keep doing better. So I think here's where AI, generative technology model can really help, that it helps you detect the risks while you are already doing the business alongside. So I think that's where really the effectiveness of the output, the deliverables, while at the same time keeping the ethos of corporate governance intact will help. So I think that's my 2 cents on leveragement.
Wow. So, uh, I'll go for the next one. How has the role of corporate governance evolved in light of recent global scandals or economic disruptions? So, who's starting?
Maybe I'll start this time. So the number of corporate scandals that currently exist are quite a lot, but without naming names,
Yeah.
let's try and do this on a no name basis. So um, I think by the end of 2023, I mean 2022, once we've had um, LLMs and AIs and ChatGPT releasing itself and other pieces coming through, the risk of corporate scandals and other things have become significantly higher, primarily because you have no control on data. And even if you do have control on data, you don't have the ability to understand how data utilization works. So I think by the end of with the kind of uh, scandals that have come through, there has been significant improvement in terms of how we sort of revitalize corporate governance standards and look at corporate governance as something that's more business oriented and is a need, especially with things like data privacy, with things like HIPAA compliances that currently exist for probably anybody. Some will probably be involved in some of these pieces, right? So I'm not really sure where. we're heading in terms of creating a regulatory worldview of it, because we currently don't have an idea of what this worldview is going to look like, because it just keeps changing, it evolves continuously, right? So I don't think I'm particularly in a good position to say how it's going to look maybe 2 years down the line or 3 years down the line. In the immediate future, with the number of like risks that currently exist in the kind of AI environment and the post chat GPT world that we live, I think it's preferable for us to be a lot more cautious in the way that we approach compliance, rather than looking at compliance as a tick box or a checkbox activity for a company. So maybe that is a good start, at least in terms of just understanding how to mitigate these kind of risks, but can't really predict beyond.
All right, I'm going to chime in, Jaswinder, if you allow me.
Yeah, yeah, please
Yeah.
go ahead.
So maybe one of the challenges, I think, which I think perhaps has been a great enabler also for businesses through the case studies we saw, is that we are more in the public scrutiny than ever. Not just for the right or wrong reasons, but for even for the purposes of just information or just public consuming. The public is here to consume content more than it could ever do, right? And this is especially in the aftermath of COVID, when the entire world went online on the social media, and people started blogs. And I'm just trying to give an example of concept of influencer marketing, the contra of which is de-influencing as well. So there are content creators in the market today who have taken up the cause of talking about certain products, certain things that are good or bad for you, for a consumer, and how that is becoming a parallel tangent of a regulator and a company that is, that is educating the mass as such. When I say a challenge in light of the global corporate governance practice, is that you are not just bound by a regulator's compliance mechanisms, but on a daily basis as the content floats, you never know what new challenge you are facing on your product that was selling in the market for 60, 70 years. Without giving examples of what products I'm talking about or what companies I'm talking about, they were a rage in the market for decades, and they are literally global giants as they are known for. And however, one blog or one video can literally change the success of that product overnight. And what that does, as a matter of fact, I'm talking about this one company of mine when I'm talking about it, that they went back to their laboratory, they reformulated the product, they ensured. So just to recap, there were blogs, there were content that challenged the very products sanctity in the market, and these products we are talking about were of global giants, right? The challenge they faced was from directly from the public, and it's not just a regulator telling you that you're in non-compliance. It's the entire public mastige that is questioning the trust in your product, right? Talk about challenge when you can avert maybe a notice, you can maybe avert a court case, right? But what you do with the public trust that you've built over 60, 70 years, which have gotten turned overnight, that challenge is more an enabler today, I see, because that company, the product went back to the lab, it got itself reformulated, it ensured that it's putting its product at pedestal with the global standards, and coming out again in the market saying, i commit I commit to, rejig my practices, my corporate governance ways of working, to ensure that there is transparency across geographies and the functions, right? It's not just inter se, it is to the public also, that I open myself, I bring my corporate governance ways of working or lifestyle out. So that challenge to me is more an enablement for companies to really kind of create that differentiation for themselves now. So as we talk and as the times advance ahead, everybody is going to be in public scrutiny. Everybody, apart from the regulators, also going to face that hammer of who knows what content comes out and tells that this product, in fact, has this issue, or this is something which is not good for you, etc. So yeah, that's one of the ways I'm thinking of it. And Maybe Jaswinder will help me add on.
Okay. So yeah, as I was mentioning that Vignesh and Khubi have already covered on various aspects of it. But yeah, I was touching upon on the Companies Act 2013, where the certain changes were brought into place, like accountability and for the CS function and for the shareholders as well. And so I think these practices which have been started are playing an important role towards enabling businesses towards governance and more about the whistleblower policies which are being implemented as on days. So that's also one of the critical function. Nowadays it's coming about the CSR and the ESG practices also, which isn't CSR is kind of a mandatory thing only for the listed companies and all, but private companies have also seen who are coming and getting involved, proactively getting involved in all those activities as well. So I think just to summarize what Khubi and Vignesh has said, so yeah, these things are becoming an enabler for the business as well as the governance function as a whole.
Thank you for leading us, Jaswinder. My next question was on CSR, but looking at the time, I would ask other panelists, okay, how can, in brief, add to what Jaswinder just initiated the discussion, how can corporate governance integrate CSR initiatives into the core business strategy?
Khubi?
Oh. Uh, I hope that's okay and I'm
Yeah,
visible and audible.
yeah, yeah,
Yeah.
yeah, yeah. Don't
I
worry.
think in just one sentence, this is my belief and learning from so far, whatever I have advised to my businesses on. It is already an integrated culture that will tell what how much of corporate governance is taken seriously in a company. So if we have to answer the very question that whether CSR should be integrated in corporate governance is what is going to be like a more like a litmus test of the company's health, the company's vitality when it comes to corporate governance as a culture or as a way of working. Because if it has to be mandated in, as I said, and as I think I've been recurring as a theme, to me corporate governance is more like a self act. It's you driving the narrative and not the other way around, which causes the differentiation. And as Jaswinder has said, that CSR is more like a mandatory compliance for companies, turning a certain profits in a year or the NR, whatever is applicable. The fact that if I need a government to tell me that I should invest in public trust is telling that how much of corporate governance is in your ethos or is in your fabric. So I'm going to leave this answer with that thought, and yeah,
Yeah.
maybe for some other time we'll have case studies.
Yeah, yeah.
Um, for me, I think CSR as a concept, um, every company ought to give back. That's a definite, right? In whatever shape, way, or form. So CSR is just a way to do it. A good example, and this is something that I've been reading over for a very long period of time, is Zoho Corporation has its own wonderful way of reintegrating mothers who have had career breaks, or women who've had career breaks, or generally individual who had career breaks, who can be trained into the kind of requirements that Zoho has, or just making them more employable, right? It's not just part of their ethos, it's also something that helps them in hiring, it helps them in bridging the culture gap between employees and their company by themselves, right? So we can't just look at CSR as a way to just give back alone. Yes, it is the primary ethos, but I think CSRs can also serve as a very good business hook or a good business purpose as well.
Yeah. So thanks. Now I'll hand over to Jolly to continue the panel discussion. And over to you, Jolly.
Thank you so much, sir. So my next question to our panelists would be that what advice would you give to CEOs or board members to strengthen corporate governance in their organizations?
So I think my advice would be to see it as a business enabler and not as a business hindrance. And I think that's how you can inculcate this into the culture of the organization, and which would be a win-win situation for everyone.
For me, I think the advice I've been giving to the CEOs I've been working with have been very simple. If you don't have corporate governance, you are likely to fail. So think about it as a way of survival rather than as a system of compliance. That's one thing that I think all CEOs or anyone who's starting, who's working as in management, C-suite positions need to know is that policies, processes, frameworks. These are the three things that are going to make or break your company. And this extends across all functions.
Um, I am just going to begin with saying that I think I'm more on the learning side. But if I were, in fact, compelled to advise something, it would be that perhaps to look at corporate governance as more of a silver lining or enablement in today's environment is something that will really, once again, bring the differentiation factor between us and our competitors, is what I would tell my board. And the fact that let's look at opportunities to drive that narrative in the market is what will also enunciate that triple bottom line for us. So let's move from the top and the bottom line, and it's actually all about the triple bottom line, which is a very famous euphemism of sorts we use now in our corporate governance corridors. So let's look at that as a way to create differentiation instead of as a compliance mandate from your legal team. So I think that will be something that I would maybe recommend to a friend or the board.
Great. My next question would be that what changes would you like to see in corporate governance practices in the next decade?
Okay, Vignesh, you
I'll
want to
take,
take that,
I'll take,
start with that?
I'll take this. I'll take this. Um, in the next
Being the
decade, I think
senior.
predicated from my last answer, I don't know what it's going to look like. But what I'd love to see is corporations understanding the value that a bottom-up approach of corporate governance looks like. So, a simple example, right? Maybe something like what Dipinder Goyal did when he went on deliveries himself, or like the Uber CEO out of India went as a driver across, I think it was Delhi, right? So when you understand the lowest common denominators problems of your company, that's when you're likely to figure out the highest problems that can occur within your company. So with the kind of startup culture, with the kind of emphasis that currently exists on improving different offerings, services, products, etc., I think companies should concentrate on solving their most integral basic problems and create governance around that, and everything else will stem upwards. So corporate governance for me, everyone who's in a company should look at it from a bottom to top approach.
Okay, so if I have to see, like, I'll take up from where Vignesh has just completed. Like the startup culture is so much prevalent, and there are a lot of innovations in the world with new kind of products and services being coming into place. So I think for regulated entities, there wouldn't be a challenge because by default that would be inculcated in the culture of the organization from the initial days. But most of the startups or the organizations which are coming in are trying to leverage the gray area of it, where it doesn't fall into a regulated entity and it uh, kind of a non-regulated entity as well. So I think towards that side, with the advancement of technology and the startup culture, I think the governance functions would be more and more prevalent, because I think some of the governing bodies have also started moving towards the self governance practices for the organizations. Recently there was a notification, there was not a notification but a parliamentary standing committee report where they have recommended that the companies should move towards the self governance practices. So I think now in future, the organizations would move towards that, which would enable the regulators and the ministries also to operate in a different way, where they can uh, take a benefit out of that and ask the organizations to follow the best practices.
Right. I will just build up on Jaswinder's point. So, one of the laws that we recently saw change the landscape in corporate governance, to my reading, was the Jan Vishwas Act. Right? Jan Vishwas Act literally meaning that it's a public trust law, and that they decriminalize a lot of sections in prominent corporate governance touching statutes such as Trademarks Act, Copyrights Act, Environment Protection Act, things, legal metrology, things like that. And it was only to emphasize or drive a point home that we would like for corporates to take charge of their own house. We would like for corporates to come out and build that public trust, and with the regulator saying that you yourself want to adopt practices that make you self compliant, and which is exactly what I'm trying to do, while echoing Jaswinder's point. And this is something I think I very strongly believe is what we'll see in the next 10 years with India as well. So, for example, ASCII itself is a self governing body on advertisement related, advertisement related regulations and guidelines enforcement. It's all constituted by the industries amongst themselves intersay, which vote people on the board, and they create the kind of mandate. So self governance or self compliance is what going to, once again, as I think I love the word differentiation, so I'm going to use that again, that will cause the differentiation, that will set apart a company that's practicing traditionally from a company that's future ready, that's ready for the global competition, that's ready for the global innovation as well. So keeping your eyes and ears out, as Vignesh had told, are you on the field to preempt actively for yourself what can cause a corporate governance deal breaker for your company or for your business? Will in fact help you drive the narrative, not in the industry, but also with the regulators in the future. So, yeah, I think these 2 points for me is what I feel I'll also myself in my role try to drive over the next decade to bring better governance practices.
So that was great to hear all the inputs that has been shared by our panelists. And that is it for today. We have a lot of questions lined up, but we are again under the foundation of time, and our guest has to be somewhere else as well. So I hope we get the opportunity again to discuss further on this very topic and many other topics that we have in our questionnaires lined up with us. So thank you so much. If I summarize what broadly has been discussed, it can be very rightly stated that corporate governance isn't just a framework; it's the foundation of trust in business. As companies navigate an evolving corporate landscape, strong governance will remain at the heart of sustainable success. So, I would like to thank all of our panelists and our audience for sharing their expertise, and our audience to hear their expertise, what they shared with us, and for being the part of this conversation. I would like to hand it over to Amir sir for giving a vote of thanks, and then we can sum up.
Thank you, Vignesh, Jaswinder, Khubi, for taking out apna time and making adjustments. Now you're part of the Coffee Tribe community. So we look forward for more conversations. We are starting with fireside chat also, cross verticals and creative interest. So we'll share those with you all, and you can be part of wherever you can be. So like a M&A lawyer and a VC. I'm just giving an example. So we have done coffee with where there 2 3 coffee speakers who write Hindi poems. So we are bringing them and having a fireside chat. Someone scuba diving. So there are 3 to 4 coffee speakers who have this creative interest of scuba diving. So many things which we have come across in this 4 years journey. So we are bringing from panel discussion, we are taking that to a next level, and uh, we are also coming up with awards also. So stay tuned. And for that, the awards will start in the month of December. We'll give the details will be coming to you in your respective groups. And thank you, Khubi. Your main coffee is pending. So Anand must have told you okay, what is the main coffee, and can also connect with all. We'll share the details of
That
two per panelist. And uh, we are starting with meetups also. Look forward for this in 2025. A lot of excitements. And thank you once again. Uh, so enjoy your weekend, and we meet again with another topic, panel discussion, or a fireside chat. Thank
Thank you.
you.
Thank you
Thank
so
you.
much.
Thank you so
Thank you
much.
very much, Khubi. Thank you, Jaswinder. It
Thank
was
you,
really fun
everyone.
meeting. Thank you, Amarji, for organizing this. Excellent stuff.
Yeah. Thank you. And special thanks to Vignesh for being following up कि भाई where are my questions? What is happening? Where is it happening? So I like that a push given by the coffee speakers being part of Coffee Tribe. So that gives, and special to Jaswinder also and Khubi, and special thanks to Anand. ये
I let
she
Anand know how many times you've thanked him today.
Yeah, see the depth of ये conversation, inputs being shared by each everyone. That is what we bring to the table, and that is what you added being comment at the last this thing, and everyone enjoyed. I can see the smile on everyone. So that is what we bring. The coffee is all about. I just say three words, hashtags: memory maker, change maker, and bring smiles for lifetime. So we'll
Very
I
part with
noticed
this.
that.
Sure, ठीक है.
I
I'll
noticed
take a
good.
leave now.
that.
I'll have to rush
Yeah,
to a
I
meeting.
know, I know. Jaswinder has to go.
Please, please.
So he messaged me. So thank you,
Thank
Thank
you.
and
you. Thank you so
God
much.
bless
Thank
you.
Bye.
you. Thank you
Take
again.
care.
Everyone.
Yeah. Bye.
Bye.